Indexed universal life, IULs, are typically marketed as an alternative to whole life for infinite banking. However, this video is going to talk about why that's actually a bad choice for you, your family, and everyone around you. Indexed universal life, IULs, are often marketed as an alternative to whole life for infinite banking. However, that is actually a bad choice for this strategy. The overall reason being that there are no guarantees. You do not own your policy. You do not actually own it. I know it says policy owner and says your name on it, but you actually don't own it. You have no control over any of the features or factors of the actual policy contract. And that is why if you look at a whole life contract next to an IUL contract, a whole life contract is 20 pages and an IUL is going to be 80 to 150. There are a lot more things that you don't know about in that contract, and we're going to break them down right now. The first thing that's not guaranteed is the growth. In a whole life contract, everything is guaranteed. The dividends are not guaranteed, but they've been paying out dividends for the last 150 years. All right, so it's as guaranteed as it can be. With an IUL, the way that it's marketed and that it's sold is that you're going to get the growth of the market with no losses. And I know that because I did it for a year and a half. However, that's not accurate. It's not accurate because there are cap rates, participation rates, and these BS indices, these BS indexes that are actually being used today, like at National Life Group, the US Pace Setter Index, which is not a real index and it's totally man-made and didn't exist 20 years ago. It is not something that you should actually put your money into. And you have to understand that the growth that they're talking about is not really growth in the market. It's growth tied to the market. And I don't know about you, but in 2022, the market went down. Your cash value will go down when the market goes down, because even though you're not going to grow your cash value, you're going to get a zero on that. You're actually going to decrease your cash value because there's costs and fees that are also associated with it every single year. Which leads me into number two, which is unpredictable fees and costs. Because you don't actually own your policy, if you look at the fine print of an IUL illustration and contract, you will see that the insurance carrier has all of the rights to change the mortality and expense charges, the administration charges, the rider costs, the surrender charge, and these are not fixed. They can change them at any time based on their sole discretion. And I don't know about you, but if you own a business in America and the economy is going down, and you need to save some money, you're going to increase your costs. And the insurance company has been doing that for the last 20 years, and they'll continue to do that as our country continues operating the way that it has. So it's important for you to understand this and understand what an IUL really is in regards to the fees and charges. Because as Nelson Nash states in the book, Becoming Your Own Banker, which is if you're not following this for infinite banking, then you're not doing it properly. And if your person's selling IULs, then they clearly are not an infinite banking practitioner, because Nelson Nash says on page 39 that a universal life is nothing more than 1 year term insurance with a side fund of an interest-bearing account. It was an attempt to unbundle the savings element and the life insurance element of a whole life policy, something that cannot be done if one understands the concept of whole life insurance. Universal life was invented by E.F. Hutton, a stock brokerage firm that, in my opinion, knew nothing about life insurance. And when I saw the policy, I saw that the illustrations kept falling apart when the insured attained age 65 to 70, which means as you get older, the costs of the 1 year term became prohibitive at the advanced ages and ate up the cash fund from that point forward. Therefore, I never sold one, and I surely wouldn't buy one. This is important because they don't tell you about this. But if you look at the expense charges, if you look at the rising costs of insurance, an IUL, I know it is marketed as a permanent life insurance policy, but it's really just a permanent annual renewable term policy that increases costs every single year and increases costs significantly as you get older. And I don't know about you, but I'm planning on living a long time. And if you live past 65, 75, 85, those charges are through the roof. And when you die, right now, life expectancy is in the 80s, around 85, 87, depending on what website you look at. But that's when you're going to need your actual life insurance policy, and that is when there's the highest risk of actually lapsing. And this is what this book, Lapsed, by Elon Musk, the Universal Life Whistleblower, is all about. It's understanding that if you're an investor in the life insurance sector, you must purchase this book to understand the massive risk to which you are exposed. 90% of these universal life policies will likely lapse before paying a death benefit. It is super important to understand it. I'm not going to go into the weeds of it for the sake of just keeping this video simple, but you must read these two books if you really want to get a good idea of how this works. Before we get into the third reason, make sure to like and subscribe and turn your notifications on so we can bring you as much value and service as possible on your journey to understanding life insurance, business, and money together. And the third thing is dividends. IULs do not even have dividends. There are no dividend components. So if your agent or the person you're talking to is talking about dividends and talking about IULs, that is a red flag that they don't know what they're talking about. Only whole life has dividends because in mutual participating companies that sell whole life insurance, the policyholders are the owners of the company. And so there's a profit sharing going on from the performance of the life insurance company. And so at the end of the year, the life insurance company will take all the money that they've made and all the money that they've paid out and keep a reserve or contingency fund with a little bit of cash in the bank to make sure that they can cover any outstanding charges, and whatever's left over divided by the revenue will become their dividend rate. And they will credit your cash value based on that dividend rate. An IUL, Indexed Universal Life, does not even have dividends. No universal life policies, IUL, VUL, or traditional UL, do not have dividends. So if your agent is talking about this, they do not know what they're talking about, and it is a major red flag. If your agent's not utilizing this book and not showing you how to use whole life insurance to do infinite banking, they're doing it wrong. Putting this all together, IULs have a very high chance of lapsing when you need it the most. Right? If the market doesn't perform and do what it's supposed to do, which it never does, then an IUL is going to lapse. All you got to do is illustrate a 4% instead of a 6% growth rate in the IUL, and you will see how your policy is going to lapse in your 50s or 60s, and you're not going to actually leave any money behind to your family. Whole life insurance, no matter whether it's structured right for IBC to max out cash value or not, is never going to lapse as long as premiums are paid. Whole life is fixed, it's guaranteed, and it is the most sure thing that you will have in your investment portfolio. I promise you that a whole life insurance policy utilized for infinite banking will be the best decision that you've ever made. And so bottom line is whole life wins for infinite banking, simply because that's the way that it's supposed to be. You're guaranteed to own that contract. You own that contract. You're also a participating member and owner of the actual insurance company when it's a mutual company, so you share in the profits through dividends. You're going to have guaranteed costs and fees that no matter what, whether the market goes up, down, left, right, or sideways, are going to be the way that they are in the illustration forever, and you're going to get dividends on top of that so that you can actually get a sound money solution to all of your financial problems. And that is why whole life wins for infinite banking and why IULs suck for infinite banking.